Good afternoon. Today is the 21st of July, and this is hot off of the press. I will give my commentary after the AI reads this to you about this is affecting people that want to buy homes to live in Baltimore City and people who want to buy homes as an investment property in Baltimore City. I just got firsthand news from two of my lenders that they have pulled out of Baltimore City for people that want to buy homes and live in it in Baltimore City. Okay, let's see what they have to say. Then I'll give my commentary afterwards.
Yes, the information you provided aligns with what I've found regarding lending in Baltimore City for both investment properties and primary residences. Here's a summary of the key points, confirming and elaborating on your AI overview. Lending to people that want to buy houses in Baltimore City as an investment. Non-QM and investor lending restrictions. There are indeed concerns and reported restrictions in the non-qualified mortgage, non-QM, and investor loan space in Baltimore. Several sources confirm a, quote, fraud alert and heightened scrutiny from lenders due to alleged appraisal fraud and other fraudulent activities, particularly concerning 2 to 4 unit investment properties. This has led some lenders to pause activity, issue do not use lists for certain appraisers and borrowers, and generally increase their due diligence in the Baltimore area. Reasons for restrictions. The reported issues include artificially inflated property values, unrecorded liens, misrepresented ownership, fraudulent lease agreements used to qualify borrowers, large unexplained jumps in property value, DSCR loans. Despite these issues, debt service coverage ratio, DSCR loans, are still a prominent option for investors in Maryland, including Baltimore. These loans prioritize the property's cash flow potential over the borrower's personal income. Lenders offering DSCR loans generally look for a DSCR of at least 1.0 or 1.25, though some may go lower. Requirements typically include a minimum down payment, as low as 20%, a credit score, and sufficient liquidity to cover reserves. Other commercial/investment loans. Other commercial property loan types, such as agency loans, Fannie Mae, Freddie Mac for multifamily, HUD loans, CMBS loans, and SBA loans, are also available for investment properties in Baltimore, with varying terms, interest rates, and loan amounts. The Neighborhood Impact Investment Fund, NIIF, also offers direct loans for development and preservation projects, lending to people that want to buy houses in Baltimore City as a place to live as a primary loan. Primary residence mortgages readily available. Lenders continue to provide a wide array of mortgage options for primary residences in Baltimore City. This sector is largely unaffected by the issues impacting non-QM and investor loans. Assistance programs are key. Baltimore City and Maryland offer numerous programs to make homeownership more accessible for primary residence buyers. Maryland Mortgage Program, MMP. This is a significant program offering below-market fixed interest rates and various down payment and closing cost assistance options, e.g. first-time advantage loans with 3%, 4%, or 5% DPA, flex loans, Home Start, Smart Buy for student debt, home mobility for those with disabilities. Eligibility often involves income limits and the property being occupied as a principal residence. Baltimore City Department of Housing and Community Development, DHCD, incentives. First-time Homebuyers Incentive Program, FTHIP, provides 50% of the down payment, up to $10,000, for eligible first-time homebuyers with household incomes at or below 80% of the area median income. Vacants to Value Booster, a $10,000 incentive for properties that were subject to a city-issued vacant building notice, encouraging rehabilitation and primary residence occupancy. Live Near Your Work, a grant program that matches employer contributions for homebuyers. Baltimore City Employee Homeownership Program, a forgivable loan, typically $5,000, for full-time Baltimore City employees purchasing a primary residence. Settlement Expense Loan Program, SELP, offered by Baltimore County, and similar programs may exist in the city. It provides assistance for closing costs, often as a deferred and forgivable loan if the homeowner occupies the property for a certain period. Housing Choice Voucher Homeownership Program, a federal program administered locally by HABC that helps eligible low-income families and individuals purchase a home. General requirements for primary residence loans typically include homeownership counseling, a minimum personal investment, e.g., $1,000, and the property being the buyer's primary residence. FHA, VA, and USDA loans are also common government-insured options for primary residences. In conclusion, your AI overview accurately captures the current lending landscape in Baltimore City. While the investment property market, especially in the non-QM space, is experiencing increased scrutiny due to fraud concerns, The primary residence market remains robust with various programs designed to support homebuyers.
Okay, so you heard what he said. Nutshell right now. You need to, if you want to buy a house in Baltimore, straight up, just call the money lady. Call Afia, AFIA. Give me a call as soon as possible. I am only going to offer free consultations for this week to give you some type of advice as to where you need to be. Normally that is a $5.95 consultation fee to break down your credit, look at your income, tell you how much you qualify for. All credit reports, all credit pulls will be charged at the time of credit pull directly to the credit agency. But call me today when it comes to buying a house to live in Baltimore City and buying a house to invest in Baltimore City. Also give me a call for hard money loans. Right now, hard money loans does not seem to be affected right now, but it will get affected. Why will it get affected? Because the lenders that are giving money for hard money loans want an exit plan for their investors. That means the loan is only good for 6 months to a year. They want to be paid off so they can go back and reinvest. So call the money lady today, Afia, at 443-226-3610. If you don't know, you don't know. You need to get educated. If it doesn't make money, it doesn't make sense.